And we're live. G'day, I'm Scotty North, and this is Zenium Live, where we talk all things money, finance, and property. And it is lunchtime on a Thursday, so in Australia, that pretty much means it's the end of the work week. And so grab a bite to eat, sit down, and listen to some good content coming out to us today. I know that after this, that I take off and don't do anything else till possibly Tuesday. So, but just don't tell anyone else in my team that, because they think that I'm actually very busy. All right, today's show, I'm pretty excited to talk to a very special guest. We have someone who is not only, the traditional, the wife or the mother or the business owner, but she's also an author and a finance broker. And I'd like to welcome Caroline Jean-Baptiste. How are you going, Caroline?
Good, thanks, Scotty. Thanks for having me.
Oh, look, thanks for joining us today. Now, look, whenever we dig into someone's history, there's always some good stories and some, good fodder to discuss and how we got to where we got to and all that sort of stuff. But if you want to give us a quick overview of, right now you're a mortgage choice broker in Brisbane, capital city, Queensland. And so tell us in 5 minutes or less how you got to be there and some of your highs and lows along the way.
5 minutes, that gives me a lot of time to talk, Scotty.
Well, you can make it 2 minutes. I'm okay with that.
That's all right. I'll see what I can talk about in the time frame that I've got. So I began my mortgage broking journey after returning from overseas, and I was looking for a business, really. I had attempted to get into the property market about 5 years prior, and I'd walked into my local branch and they just simply said no. And I was really feeling embarrassed that I'd even bothered going to approach a bank to see if I could get a loan, because I'd saved up a good sized deposit. But getting rejected, I just felt as though I didn't deserve to be in the property market. But when I came back from overseas and saved a bit more money, I found Mortgage Choice franchise available, and I thought, wow, that would be a great opportunity. And when I investigated broking a little bit more, I just thought, why hadn't I come across this 5 years sooner? Because getting into the property market 5 years earlier could have made an enormous difference to my wealth, actually. But I'm really glad that I found it at the time, so that I could actually help other people avoid this problem that I faced by being rejected by a branch for my first home. So I started off just as a small business in my lounge room in Kangaroo Point in Brisbane. And I grew the business over 16 years to what it is today, which is a strong team servicing all sorts of different property buyers and refinances. So we specialise in empowering women to buy that house so that they can create choice, flexibility and control in their future. I've got a good, strong team of people behind us who help people get the loans that maybe a bank might say no, or maybe they just need help with structuring or putting a strategy in place to get their property portfolio nice and robust and take advantage of how the Australian property market is going. We help people in Melbourne, Sydney, Brisbane, all over Australia actually, to get into the market, because I just am really passionate about buying homes and having somewhere to live at retirement. I think it's really important and a really important part of any wealth creation strategy.
Yeah, no, that's true. And look, having that home going into retirement, there's a whole bunch of stats around that, which we won't bore people with today, but it's a very good point. So you make some great comments there. I love the fact of empowering women, and also, you mentioned that you get the banks to say yes, which is actually the topic of the show today, is how to get the banks to say yes. And you've compiled all this information in a book format. Now you can see I read a lot of books. There's a lot of, actually no, I've got a lot of books, right? I've got a lot of books. So have we all read all the books we have on our bookcase? We're not going to answer that question today. We'll save that one for another time. But there's a book here that I think we should look at. There's this one here. It's not bad, right? Like, look at that. And look at there's an author there. She looks kind of familiar. The name is a bit familiar. We might have to make me bigger there, just because everyone can kind of see it. There we go. That's Caroline's book there. Buy That House: How Kick-Ass Women Make It Happen. So there you go. So I flicked through this because I wasn't sure if I was allowed to read this book because I'm not a woman and I probably don't kick ass. So I was unsure. So I gave it to my wife. She's loving it. But I was flicking through like over her shoulder and having the odd look. But can you just tell me, are men allowed to read the book as well?
100%. What
Okay.
man wouldn't want to know how a kick-ass woman makes it happen?
Okay. All right. That's good because I've read probably a little bit more than I actually tell you. So there's some really great stuff in there, especially on your story of how you just mentioned before, how you got, rejected from the bank, that sort of thing. And then how you went from being a big spender, you're quite good at spending, to being quite good at saving. And I think that that's a really important journey that you've taken and you've been able to share with others. So, you know, hats off to you on that book. I think it's fantastic. And we'll talk a bit more about that a bit later. So let's dig into how to get banks to say yes. So let's set the scene. I've got a question for you. There's this little thing that happened last year called Corona. Not sure if you've heard about it, but how are things changed in banking and broking land since, before then to now in terms of getting loans?
Look, it has varied across all different industries because throughout Corona, as we are all aware of, some people were hit really, really hard and they couldn't meet their home loan repayments, and some people actually did really, really well out of it. So from a lending perspective, banks went through a period of looking really in depth at everybody's situation and us having to justify what their employment status continues to be post-COVID and post-lockdown. People in Melbourne and Sydney, we had to provide a lot of commentary on exactly how they're doing their work from home and how they're impacted by Corona and if it's going to be long-term and what their employers are doing and all that sort of stuff. But with the introduction of these incentives and the first home loan deposit scheme and the family home guarantee, what I have seen is lenders go from being really strict and really investigating those living expenses to becoming a lot more reasonable. So there are some lenders who are looking at everybody's situations and just being a bit more reasonable. So with this family home guarantee, as a single mother, for example, they're going to be wanting to get you approved for a loan because these sort of incentives don't come out very often, and it's a really great way to get single parents into a home. For the first home buyers out there, these sort of incentives are there to actually get them into a property with a lower out-of-pocket expense, so that they won't be paying mortgage insurance if they qualify for these schemes. But a lot of lenders are really wanting to get people into the market. Now, it's a different story if you're self-employed. Given the impact on small businesses for the last 2 years and banks generally requiring 2 years financials, and also the JobKeeper and the cash flow boost and all these other things that are impacting how banks would usually assess self-employed applications, they're asking for more information and wanting more like BAS returns and things like that. So there's a lot of lenders out there who are actually coming into the market and helping out people who don't fit the mainstream lenders' policies. So maybe somebody was able to go to Commonwealth Bank or one of the big four banks previously, and now they don't fit that lender's policy anymore, but there are other lenders who are picking up the slack, and that's their area of specialty. They're our specialist lenders.
Okay, it's interesting. So my notes to ask you while you're talking was, was it got easier or harder? So it's kind of a bit of both. In some respects, some people find it easier to get a loan than, say, end of 19. And if you're self-employed, perhaps it's more difficult, is what you're seeing, right, at the coalface. So that's,
or in an impacted industry, yeah.
Right, okay. So they're just looking kind of, what I'm hearing you say is the bank's looking more heavily into your industry and how you're impacted by Corona, rather than just all the nitty gritty of what you spend and other bits and pieces. Is that right?
Yeah, that's right. They're looking at the bigger picture. And if in lockdown, for example, your living expenses have come down, what you will probably need to declare or consider is what your living expenses will be once the lockdown lifts.
Right. Okay. So, yes. Well, lockdown is a good time to save money if you can't get out and spend it. So, if only you knew that in your book, Carolyn. If only we knew lots of things in 2019. All right. So, you alluded to sometimes as the market always changes, the lending market. So, it's not always a straightforward answer to say this bank's easier to go for a loan than this bank. Is it because it's always changing? And it's the same thing right now. There's some banks that perhaps it never dealt with before, and now you are? Like, is it sort of that side of things changed?
Definitely. So there's so many factors that have changed over the last couple of years. Living expenses being one of them, or the household expenditure model, where the household expenditure model is the benchmark of living expenses, and the banks are using that as a minimum spend, but minimum expected spend, and but you also need to declare how much you do actually spend. If you under-declare, they're going to use that anyway. The other things that have come in is because the interest rates are so low, they can't just sensitize the rate when they're assessing the loan and how much you can repay. Like, they used to just add on another 2%. So they're really assessing your borrowing capacity around 4 or 5%. And a lot of people have found that their borrowing capacity increases with this measure. But they've also introduced something called debt to income ratio, or DTI, or loan to income ratio, or LTI. And these sort of things, if you're trying to borrow up to your maximum, which with the property market going the way it is, a lot of people are needing to borrow the maximum that they possibly can on their incomes just to get into the market, or even just for to invest, or just to build their wealth. And temporarily maybe they are on a lower income and they will end up being on a higher income. But these are the other factors that have been introduced in an assessment, from an assessment perspective, which can make it more difficult to borrow through your traditional lenders. And this is where the other lenders are coming in to pick up the slack. So when it comes to borrowing capacity and wanting to actually achieve the investment property or the home that you really want, there's so many things to consider. And this is where the finer detail in lender policy comes into play.
Yeah, okay. And obviously that's a pretty big plug for why you should use a broker and not try and visit your 300 banking institutions on your own, right? It kind of goes without saying. So we've got some comments coming up here, some serial watchers. Michael, hi, guys. Hey, Michael, we have a lovely lady on today. So just in case you're actually just commenting and not just watching. So, Michael, you've already answered that question for Michael. Has borrowing capacity increased? And that was very well answered there by Carolyn just a minute ago. So if you've got any comments or questions, chuck them up there. We can discuss them live. Otherwise, I've got some comments and questions as we move forward. So are you finding a difference? There's always a difference. So what differences are you finding right now for owner-occupied versus investors going for a loan? Now, I suppose that's going to be dependent on if they're self-employed, and you've answered that sort of question before, but just on that difference alone, whether it's an owner-occupied or investor, how are they differing?
So when an investment loan is assessed, there is a negative gearing factor that many lenders take into account, which potentially increases somebody's borrowing capacity. So this is a great example of a couple that I saw last night who have managed to pay their home loan off altogether, and they're looking at getting into an investment property. When we were forecasting a proposed income of around about, I think it was like $800 a week or something like that, we got their borrowing capacity up to around about 1.2 million that they could spend on an investment property. Alternatively, when we switched over them renting out their existing property and upgrading into an investment, upgrading into another owner occupier, they wanted to upgrade to 1.3. We could only get their borrowing capacity up to $1 million because the debt that they were taking on is non-deductible, not that it's tax advice, by the way, and they had no potentially deductible debt left. So that's what impacted their borrowing capacity. But the thing is, when looking at borrowing capacity and what is possible, everyone's situation is unique. So there's lots of little tweaks that we can make to increase somebody's borrowing capacity so that they can get into the property that they want rather than the property that they think they have to settle for.
Yeah, that's a good point. So even if the criteria is somewhat different for the investment, because there's the non-tax advice, the deductibility of the debt and all that sort of stuff, they're looking through all that structure as well, and it's changing the amount that you can borrow. That's quite interesting. So is that concern some of your clients? I mean, have they changed their strategy midstream from, maybe we'll buy an investment property instead of upgrading the principal place of residence?
Look, this has also been an issue in the cities that have experienced a huge market growth over the last couple of years, which means the affordability in the bigger cities is not what it used to be. So I spoke to a client yesterday who lives in Sydney. She lives in Drummoyne, and she is wanting to get into the property market. She's managed to save a great deposit. And when we ran the figures, she could either buy a $750,000 one-bedroom property where she actually wanted to live in Sydney, and there wasn't really a lot of stock to choose from, or she could buy a $650,000 investment property in another state and still remain living where she is. So that's like what's commonly known as rent vesting. And this is a decision that a lot of people are faced with, especially when they're trying to get into the market in a city that has potentially become unaffordable. So this is all sort of stuff that you need to consider when you're looking at how much you want to spend and where you want to live. So I don't know about changing strategy midstream. Possibly changing strategy midstream is something that some people in Brisbane are doing right now, which I've actually seen over the last 12 months, because the pace at which the market is moving right now, people have had an idea about how much they were going to be spending last year, and they've come back to me 3 to 6 months later saying, hey Caroline, I can't find anything in that price range. Can we look at how much more we can borrow?
It's moving goalposts all the time, right? Like, it's crazy.
Yeah. Exactly. Yeah.
So that actually lines up to, you've got wonderful Steve Skeen commenting here. So he's saying, are you seeing more owner-occupiers compared to long-term averages? If so, when do you think investors will return?
Yeah, I am seeing more people wanting to get into the market, but also people wanting to leverage on their existing equity. So with this rise in the market, people are actually getting more equity in their properties, so they're often in a better position to buy an investment property. And I'm seeing more people interested in investing, and we're having a lot of investment discussions. So I think it's really not far away for the investors to return. Some people are sitting back waiting for the market to soften, but the reality of what's soften look like? Slow down or go backwards? I think they'll be waiting a long time.
They could be in for a bit of a shock if they're waiting too long for that.
Yes.
Yeah, that's interesting about the investors. So you're starting to see those investment discussions ramp up now and have more of them. That's a really good comment. That's good to know. Okay, so one of the other things I want to talk to you about was, obviously pending if you're self-employed or if your industry is impacted by Corona, all that sort of stuff. We need to know how to best prepare your finances and documentation to present to the bank, the best story that you can give them, because obviously it varies, right? So now I believe you've got four boys.
I do.
Is that right?
Yes.
Oh, there you go. See,
Can you imagine
I'm
how
like
quiet
the
my
next
house
Andrew
is?
Denton here. Like, this is just crazy. And so look, my wife and I have got 3 sons and a daughter. So there's with 4 kids, it's not that easy to write off your monthly expenses, right? Like on the bank serviceability thing. So how do people best prepare their finances and documentation to present to the bank? Do you have something you take them through, or how does that work?
I think it's really important to keep the discussion open with your broker before you submit your tax return, because I've seen some self-employed people claim a lot of expenses that they potentially are impacting their borrowing capacity by claiming expenses that could possibly have not necessarily been.
So you can't give tax advice because you're on here as the broker. So let the dodgy property show host talk about this. So what Carolyn's saying is that self-employed people write off a whole bunch of crap that they otherwise would have to pay for, and so sometimes it's better to not write that off and pay the tax on it because it increases your taxable income. Therefore, it looks better to the bank. Is that pretty much what we're trying to say?
Yeah, look, one of the things that self-employed people come up against year after year is they know that they can afford a property, but what they're paying tax on is what the banks assess your borrowing capacity on. So I did have someone recently who declared $20,000 taxable income, and we weren't able to borrow very much at all.
Well, you're not even paying tax at 20K, so only wonder they're not interested. So, yes, right.
The income in the business was potentially much healthier. So, I think keeping the conversation open with your broker before you submit your tax return and seeing what position you're in before you go and have a discussion with your accountant is a good strategy to implement.
Yes, all right, there's good advice there. Okay, and if you're not self-employed, what sort of length of time are the banks looking at now? Is it 3 months? Is it 6, 12 months? Like, what sort of history do they want for someone?
Well, this is the great thing about having so many different lenders to consider, because some lenders require, let's say, casual for 12 months. Some lenders require casual for 6 months. So there's differing policy across lenders when it comes to casual, but when it comes to starting a new job, for example, some lenders just want to see that you've actually started the job. So a pay slip, you've been on your job 1 week or 1 month or 3 months. If you've gone from the same industry, so if you are an electrician and you have just changed jobs to become an electrician, sometimes you can get a loan the day you start your new job.
The day. Okay.
Yes,
well, that's incentive to turn up for work. That's pretty crazy. Oh, we've got some other questions here, and we're getting to the end of the time, so we're going to go through them quickly. Are there some banks that limit the amount of investment properties you can have before they assess your position differently? So does the number of properties you have impact your assessment from the bank?
Yes, it does. So quite often, and this is just general policy. So when we're talking about bank policy, it's often general. So if you've got 5 properties, so your owner-occupied property and 4 investment properties, some lenders assess you as an investor, so self-employed, and they change the assessment policy and introduce some sort of loading. But the great thing about having so many lenders is not every lender assesses you in the same light.
Right. Okay. That is very good to know. So, because I mean, to me, as I said earlier, you don't just want to go and try and hit every bank up, right? I mean, you need to go with a broker, and they're going to know which bank's going to suit you and your situation and your goals. Because I think that's the only way to move forward in a good way. All right. So, just to recap, we have seen some things change since Corona, some for the good, some for the worse, depending on if your industry's been impacted or your employment situation, self-employed versus employed. There are some banks that shift around in the ease of accessibility and use criteria, and it always is forever changing. There are differences with investors and owner-occupiers in terms of the total amount that you can borrow and the other, like the LVRs and the interest rates. And the best way to prepare to buy a home is to have an early discussion with your broker, right? Well before even you plan in your tax returns, other bits and pieces. Have I missed anything there, Carolyn?
Only that a really great way to destroy your credit history and really impact your borrowing capacity for 5 years is to make a lot of inquiries and go direct to lenders. You want to go direct to a lender whose policy you meet and who fits right for now and in the future. The great thing about sitting down and running your numbers and playing around with them and stress testing them is that you'll know exactly what you're going to land on after a solid conversation with your broker. You don't want to be going to different banks and running these different scenarios when you can do it all in one place. I think planning well, having the right discussions, and any number of scenarios that you really want to run is really important to have a good strategy.
That's a good point. Thanks for adding that. Now, we've got a question here, which is preempting what I was going to say anyway. Where can we buy the book? So I want to point people towards your website, which is just your full name with the hyphen between Jean and Baptiste there, so .com.au. And you can go on there, you can connect with Carolyn, and you can get in touch with her. You can read about a bit of her story, her team, how it works. Also, up the top, we've got the LinkedIn and Facebook connections. Carolyn's very big on LinkedIn, so connect with her on LinkedIn. So look her up on there. I'm sure you'll find her. If you can't, go to the website and you'll be able to find her there. And is this where they buy the book, Carolyn?
Yes, they can buy the book there, or they can buy it on Kindle.
Oh, on Kindle. On Kindle.
Yes.
Okay, that's interesting. Okay, I haven't done that before, but I'm sure there's lots of people that do those Kindle things. It's a bit too fancy for us country Queensland property dudes. But just to recap, this is the book we're talking about, Buy That House, there by Carolyn. And it is good for anyone who wants to buy the house, learn how to save, get your finances in order. Or if you just want to become a kick-ass woman, you can read this book and you automatically become that. Is that right, Carolyn?
Sure, Scotty.
There you go. So that's what I'm trying to achieve by reading the book. And let's see what everyone else wants to achieve on their own. Look, thank you very much for joining us today. I really appreciate your time. I always give everyone a final parting comment. If there's some pearl or words of wisdom you want to leave with our great global audience before we sign off, now's your chance.
Oh, Scotty, you put me on the spot. But if I can say anything, go and buy that house.
Okay, that's just a shameless plug if I've ever heard one. Thank you very much, Carolyn, for joining us today. It's been an absolute treat to chat to you. And don't forget to jump onto her website. We'll put the details in the links of the video again. And you've seen the book plenty of times. If you haven't, rewind it. You'll get the name of it. It's Buy That House. All right, thanks for joining us, Carolyn. I appreciate it. And we'll see you again soon. And for all of those people who are watching us live, thanks for watching us and listening to us on the Zenium Live podcast, which is available at all podcast apps and places. You can download it, and every time we do a show, we put the podcast out on there, so make sure you listen to us there. If you got any more information that you want, you can connect with us on the website. Go to www.zenium.live, or send us an email, hello@zenium.live, or give us a call, 1300 66 7789, or contact us wherever you see this video and we'll reply as needed. All right, thanks again, Carolyn, for joining us today. That's it for me for this week. I'll see you again next week, and we will have a property show, I believe, next week. So we've done our finance show, and next week we'll do a property show, we'll do a property update. We'll get some dude who has a clue. Hopefully that you're not relying on just me to talk about that one, but we'll wait and see what the budget stretches to. All right, I am Scotty North. This is where we talk about all things money, finance, and property on Zenium Live.